Hello traders, in today's video I will be teaching you guys how to understand the market structure. So what are you going to learn? Firstly, you're going to learn the importance of understanding the market structure. What does market structure refers to? The breakdown of structure, the market structure shift, and the key points in identifying a market structure. Okay, now let's start with the importance of market structure. Market structure serve as a guide that helps market participants to understand the behavior and the direction of order flow in order to make informed trading decisions. As easy as that. So now, what is market structure? Now, market structure are categorized into three forms. Now, let me explain one by one. Or you can say the way in which market is formed and move in the form of trend is called market structure. We have three types of trend. We have our uptrend. This is the uptrend. We have our downtrend, and we also have our consolidation. When price is consolidating around without breaking any structure, just consolidating around. So these are the three type of market structure that we have. After learning that, we'll be talking about the breakdown of structure. Now, a breakdown of structure is the process whereby price breaks the latest or the last high or the last low of a market form. For example, you can call it a breakdown of structure or a break of structure. Now, this is a break of structure. This man here is the last high standing. This is the last high standing in this particular area. So for price to have the ability to break this last man standing up to this particular area, forming a new high, and this is not the old high. This is the new high, and this is the old high. Now in this particular region here is what we call the break of structure. From here to here is what we call the break of structure, because price have break past this particular man, which was before the latest high, and now is already the old high. You understand now? So if price continue moving up like this, breaking any new high that is formed, keep on breaking the new high that is formed, this is called a break. All this area are break of structures. That means price is breaking structure to the upside, which is also an uptrend, because we have three types of trend. So in this particular scenario, price is breaking structure to the upside. Now, this is the bullish break of structure. So okay guys, let's talk about the important points on how to mark out your break of structure. Now, in identifying any structure, you use the highest wick in an uptrend or the lowest wick in a downtrend, something like this. If price is going to the upside, pushing to the upside, pushing to the upside. If we want to mark the break of structure in this particular place, oh no, like this, something like this. If you want to mark the break of structure in this particular place, we are using the highest wick for an uptrend, the highest wick, that is our break of structure, and the lowest for a downtrend. For example, if we want to mark our break of structure in this particular area below, our break of structure will be here. This will be our break of structure here. This is the downtrend, so we're marking from the lowest wick. This is a break of structure here, guys. In this particular downtrend, you can see, you minimize this, make sure it's from the lowest wick. Yeah, this is the key points on how to mark out your valid break of structure. You understand, guys? Now, in the process whereby you see something like this, which example will I use now? That is not a valid break of structure. This is not, for example, now this, from here to here, this is not a valid break of structure. Why? Because price did not properly break above this particular structure with the full candlestick body. Price did not do that. Price just show a weak rejection in that particular place before going to the downside. So this is an invalid break of structure. Price needs to break out the structure with its full body. You can see it here, with the full body, before considering this as a valid break of structure. So now we're going to be talking about market structure shift, or something like change of character. It can be seen whereby if the market is in an uptrend and markets want to diverse back to a downtrend, market is going to create what we are calling change of character for the price action students, or market structure shift for the ICT students. You understand? That is a changing of direction. You can call it a changing of direction from the uptrend to the downtrend. Now, for example, market is going like this, from this to here, from this to here, creating a higher low, higher high, a break of structure, and all of a sudden the momentum starts reducing and market want to shift from a uptrend to a downtrend. Market is going to form what we call a market structure shift like this. When price is inability to break past this latest high, price will just stop here, giving us a double top, or you can call it a breaker block or a mitigation block. Then price will start doing something like this and giving us a market structure shift and continue breaking structure to the downside. Now let's read this particular chart if it's something like this in our chart. Now you can call this man from here, from the highest here to here. This is our break of structure. This is our break of structure. Let's be inputting the sign. This is our break of structure. And this is our market structure shift or change of character, because market stopped going to the up, stopped breaking structure to the upside and changed to a downside. This is what we call a change of character or market structure shift. After that change of character, we can see something like our continuous breaking of structure to the downside. Is either market is breaking structure to the upside, breaking structure to the downside, or market is consolidating. These three things is a sure bet. So for you to be able to identify the market structure in a particular market, you have already solved 70% of your problem as a forex trader. Marking the structure will give you ability to find out opportunities to join and follow the trend of that structure into a profit zone. You can see this is a break of structure to the downside. So this is what we call, this particular man over here is what we call our market structure shift or our change of character. Now, there are some key points in identifying a very real or a very valid market structure. So one of the points is recognizing the end of a corrective movement requires experience, patience, and a lot of practice. Yes, you need to wait for market to perform fully. Now, something like this, some people may call this a break of structure. Some people may call this a break of structure, yes. But from my experience, price didn't break all this with a very full body. So this particular break of structure is weak because the momentum or the pullback to this particular order block over here, because there's a break of structure over here. You understand? Now you can see the difference between this man here and this man over here. You can see the difference, the very big difference between the two of them. You understand? Now, so the momentum in which price used to break this particular one is very high. So therefore, this may not be seen as a good break of structure. You have to be patient for the market for you to have a very good and neat break of structure. You understand? So after getting a break of structure, we usually expect a pullback. That is a very sure thing. You understand? If there's a break of structure, there must be a pullback. Let me show you example of that. A break of structure and a pullback. A break of structure and a pullback. Okay, let me use illustration. This is a break of structure and this is our pullback. This is our break of structure and this is our pullback. That is how markets move. You understand? Any break of structure must be guided with a pullback. So this is the break of structure here. And this is our pullback here. These are pullback. You can see this now. I hope you can understand everything I just said here clearly. So now, nextly, the structure of a larger time frame is more valid than the smaller time frame. So now, guys, we're in a higher time frame, we're in a 30 minutes time frame, and a structure in the lower time frame has a weaker potential, but the structure in higher time frame has a higher potential. For example, if you mark a break of structure in the 4-hour time frame, it is likely to be effective 80%. But if you mark a break of structure in the 30 minutes time frame, or a 15 minutes time frame, or a 5 minutes time frame, it is likely to be also effective 30%. That is it. Now, for example, any break of now, this is USDJPY, and in our USDJPY, you can see our break of structure already. This is the break of structure. This is a break of structure. This break of structure is very strong. This break of structure is very strong to compare to this particular break of structure that is driven out from our 30 minutes time frame. To compare to this man. So therefore, the higher the time frame, the stronger the structure. That's why you need to learn how to do your top-down analysis. The higher the time frame, the stronger the structure. Now again, always trade in the trend direction. Trading against the trend will eventually take you out and you lose your money. That is true. You understand? So you need to trade with the market direction. I told you guys, market moves in 3 directions: uptrend, downtrend, or sideways, which is also called as consolidating. You trade with the market direction so that you will be able to lose out your money. You understand? So I believe in this video you can be able to know how to mark a valid break of structure or a valid change of character. You understand? So guys, never enter a trade before identifying a trend. Yeah, that's a tip guide for you guys. Before you enter any market, always know how to identify the structure. Don't just jump into the market without identifying any structure. Learn to identify the structure. Once you see the market, you identify if market is going to the upside or if market is going to the downside. This already will give you a highly potential setup. You understand? So guys, see you guys in the next video, and see you guys next time. Don't forget to hit the subscription button and hit the like button. If you are still watching this video up till now, from the beginning till now, your success rate I just trust me, I believe in yourself.